Hey everyone, welcome to the trading floor's 25 days of Tradesmas. Make sure you stick around to the end of this video to find out how you can win $1,000.
What's up guys? So recently I've been doing a lot more trading in Bitcoin, specifically the 5-minute and around the 9 o'clock to 11 o'clock Chicago time. So right now UTC -6. What I've been using, it's pretty simple. I use the TTF price action toolkit, and you'll be able to use this toolkit if you are a member in the trading floor. So I'll go into the settings. I use a couple things. So the main things I use is the Japanese, aka the Tokyo session. I use the hamburger session type just to get the highs and lows. And then I also put the fib lines. You don't necessarily need these fib lines. It's this middle piece right here, but I like them just as a visual representation of where I'm at in the Tokyo session. Now, what I also use are the moving averages, and these are default. So 2155, 233, 377, and 610. I also use the price volume candles just to kind of give me some alerts about how the markets are possibly moving. Is there liquidity grabs? So on and so forth. You can learn more about that in the price action toolkit course. So don't want to go crazy into detail about that. But here is the strategy in a nutshell. So I mainly look for buys. Sometimes I will look for sells, but mostly buys right now in Bitcoin, especially because we're in a bull run. So I'll look for Tokyo. As you can see, this is the Tokyo, previous Tokyo high and the low. What I want to see is price break the high and crash down into this 9 o'clock, 11 o'clock UTC -6. Once that happens, I want to see it reject hard off of one of the major moving averages, so 233, 377, or 610. And then I want to see it reject off hard and then cross above all the rest of the moving averages here. That is the simplest and most subjective form of the strategy. And that's really all you have to know as a takeaway. So as you can see here, price breaks above the Tokyo high. We crash back in the Tokyo session around the early New York time. We reject off of the moving averages, and we also barely slip out the Tokyo low, and we come right back in. Ideally, you want to be seeing price reject the Tokyo low, or not even get there to begin with, but we want to see a good retracement inside the Tokyo session. But either way, price comes back above, and we get a nice 2-to-1 trade opportunity here. Come to the next day, unfortunately, we get a loss, but losses happen, and so we get the break above the Tokyo high, price rejects 233, and it comes back above the moving averages. We look to buy, and then we unfortunately incur some losses. But honestly, I'll look to trade this 2, maybe 3 times in this session, but normally 2 is my max, unless I split the trade's risk. Sometimes I'll do that, but I can get into that in another video whenever I show a different type of trade. The next day, so 3 days in a row, we basically have this same exact setup where price breaks Tokyo, it crashes back in early New York, and then we get price close above the 21 to 55, and we're good to go. It does not matter if the 21's above the 55, which is above all of these. All we want to make sure is that the 21 and 55 are above these 3 moving averages if you want to stay as objective as possible. Now, I kind of make this subjective in certain ways, and you'll see soon, and I'll explain why in another video. I want to go over more trades, but here's an example. On the 22nd, we don't get the break below, so we can't really sell, and we're below the moving averages, so we can't really buy unless you want to scalp this, but that's a little more risky and it takes a little more experience to do that. But I believe the last example is actually a sell. Like I said, I don't really look for sells, but here's a nice example of price breaking below the Tokyo low and comes back and retests that Tokyo low as resistance. It double tops, so you can either look to take the first one or you could wait until it double tops for the second one. But either way, both of these, you get that 2 reward, which is nice. I lied, this was the last example in October where you barely get the breakout of the Tokyo high, but you do. It crashes back down early New York, and then you get the close above right around this 9 o'clock region, UTC -6, and you get another 2R. Now, after seeing this, I looked in September. September looked nice. I looked in October, it looked nice. So I was like, let's take this out for a test drive on an account to see how well this does. And so coming November 4th, which happened to be Strategy Wars, I found a pretty decent example. Like I said, don't really sell that often, but a pretty decent example to sell. We had the Tokyo high here and the low here. We we got a slight break right before our trading region. Price pumps back into the Tokyo session, also is rejecting off the 233 and 377. So I initially took this trade off of that bounce. I put a very tight stop loss, I will not lie. I probably should have put the stop loss above here, but I did get a loss. And then you could see, I have to zoom in a little bit, that this rejection candle is red. A red price volume candle means heavy sell pressure compared to the previous 21 candles. Not only that, but left a huge wick, also rejecting off the 233 and 377. So I saw that as a green light to wait for price to break below the moving averages again and take another sell opportunity. So to break this down, super simple. If you're looking to buy, you wait for price to break Tokyo and then come back and crash in this 9 o'clock. It could be earlier. It can crash during London. But ideally, you want to crash around this time zone from 9 to 11 a.m. UTC -6. From there, you want to see rejecting off of one of the major moving averages, maybe rejecting off of some structure you could find in candle imbalance. I don't want to get too crazy, but simply looking for a buy. You break above Tokyo high, you wait for a reject off the moving averages, back up again, you take the buy. Vice versa, in this example, we have a sell. It broke the low, came back in, rejected off of the moving averages, 233, 377. You can also argue it's almost rejecting the halfway point of Tokyo. So that's why I had these fib lines. They could be nice sometimes. And then we got another break and retest off of those moving averages. Nice clean moving average retest rejection trade here. Lost the first one, won the second one, and here is the proof of that. Let me try and maximize this. As you can see, this is November 4th, and I lost that first trade, but I won the second one. So about 800 bucks with a little bit of slippage, unfortunately. Risking 1,000 to make 2,000, but all in all, nice day, and I'll catch you in the next one. Peace.
Thanks for sticking around to the end. To be eligible for the free $1,000 giveaway, you just have to be able to receive a PayPal payment. To enter, like and comment below and come back tomorrow for another video and another chance to enter.